Well, first, let's talk about what happened in Ether because that went down as well. The price of ETH went down after, as you said, we hit all-time highs. So tell
Mm-hmm.
us about the highs, and then let's go to the lows.
Yeah, Ether hit an all-time high of $4,390, which is
Wow.
really, really high, and it kind of makes sense as like when things are that high, like you can, it's easier to go in the down direction, and that's definitely what happened. Again, no one really expected this level of downness, and that's really the through line of the markets this week. Is like, holy shit. Like I kind of thought the this was the only thing that I can remember of a move like this was Black Thursday in all of my years of crypto. Has never really seemed to move that much that quickly. And Ether went from after it topped out of its high as $4,300, it came down to $3,700. Then went down to $3,500 and held there. It kind of seemed like it was going to make a nice basing pattern. But then the floor just fell out, and it went from 3,500 all the way down to 2,000. All the way down to $1,800 on some exchanges. Think about that. $4,300 down to $1,800.
It's like
That is
55%
insane.
or
That is
so off
insane.
really quick, right? 55%
Mm-hmm.
drop really quick. I've got some hot takes on that, but I'll reserve that
Mm-hmm.
for now. Let's take a look before we get to those takes on the dip. It was dip week, guys.
Mm-hmm.
You know, buy the dip, maybe. We'll talk about that too. First, let's talk about how the ratio held
Right.
up. This is the ETH to Bitcoin ratio. It's something, David, we've been monitoring since the first part of this year when ETH was really gaining on
Mm-hmm.
Bitcoin. How did the ratio hold up last week?
Yeah, the ratio peaked out at just over 0.08, which again, really, really high. And then, historically, when dips happen, the ETH BTC ratio, quote unquote, nukes.
Slaughtered.
It gets
Yeah.
slaughtered consistently every single time. You know, when Bitcoin sneezes, Ethereum just gets absolutely wrecked. And to some degree, like the ratio did pull back a little bit, but like it's still really strong. And that's kind of the sentiment around crypto Twitter right now is the ratio held up between Ether and Bitcoin, which is something to take note of.
People don't remember, but do you remember another time it held up, David, was 2017. Like when we saw
Mm.
this kind of
Mm-hmm.
action. And like,
Mm-hmm.
I feel like this is maybe a theme when we get into talking about the dip, but like so far, dude, 2017, 2021 feels like a fractal of
Right.
2017. It's playing
Mm-hmm.
out very similarly. Definitely 2018, 2019, when Bitcoin sneezed, ETH got destroyed. But that
Right.
was not the case in 2017. And this is reminding me a bit of 2017. We'll get to that.
I've been kind of thinking about like the what it means to go a full cycle, and I got into crypto and Ethereum after Ethereum pumped all the way up from like $10 up to $430, and that was crazy. And that's when I started paying attention to it. And then after Ethereum or Ether hit $430, it crashed down to $135, and that's the
Dude,
moment that I got in. And that feels like this feels like a fractal of that now. I know a lot of my friends who have just gotten into Ether in this brief moment of time, and so like a lot of my friends are just now getting into Ethereum. And price is a great marketing tool, and it feels like that time when Ether ran up to $430 off of its insane floor of like $10 to $20, and then fell down to $130.
Oh, dude, that's exactly it. Look, and the numbers are similar too. Like I remember those days. This is why I feel like this is like 2017, right? So that was 66% off of all-time high. And I remember that drop, David. It was like 420. The memes were about 420, ETH price 420. And then it all the way to 130. It was like mass panic, bull market's over. ETH was a bubble this whole time. The entire platform's like worth nothing. Like I told you guys, all of this talk, and it happened very rapidly, like in this move. It was like in the flash of a day, 2 days, all of a sudden 66% drop. Feels very much like that right now. All right, David, let's take a look at this chart because I think this really nails it home. This is one ugly looking chart, or at least one strange looking chart. Green candle up, spike. Green candle down, spike. What are we looking at here?
Yeah, this is the weekly chart. So each candle is 1 week for the ETH dollar price. And there's a famous line, both in markets, but especially in crypto, where, stairs up or escalator up, but elevator down, right? And so,
Yes.
markets climb a wall
I love
of
that.
worry, right? And so we were all super euphoric when Ether hit $4,300, and then just 1 week later, it spikes all the way back down and retraces 1, 2, 3, 4, 5, 6, 7, 8 weekly candles are erased in 2 weeks, right? And so this is a lesson in just being in zen about this, because like this is going to happen. Pain comes in markets. if you feel pain, it's just inevitability. And so this is also a lesson in leverage. If you were on leverage and you got liquidated, I'm sorry, that's the pain. It's a lesson to be learned. If you didn't get liquidated, good job. And the take here is that, perhaps as, crypto becomes more mainstream, we always thought the markets were becoming less volatile. Perhaps as these markets become bigger, the volatility actually gets bigger.
Yeah, I still think volatility is going down over the long term, if you cycle all the way out a little bit. But yes, absolutely. We're not over the volatility days. And I actually think volatility is a feature, not a bug at some level, right? So people are so afraid of volatility, but you only have to worry about volatility if holders don't have to worry about volatility.
Right.
I'm holding ETH. Yeah, traders do. Holders don't. The market gets, and I feel like the news cycle, David, gets all hung up on crypto's volatility. And they think that volatility is a proxy for risk, right? Mm-hmm. But the fiat markets are a lot less volatile, but I think they have a massive, a whole lot more tail risk here in fiat markets, right? Mm-hmm. So it's just a different, it's almost a more honest market,
right,
if you will, right? Mm-hmm. There aren't people tinkering with the dials, and so you get this craziness, and of course less liquidity too at these earlier phases. But let's talk about, everyone's asking what happened, right? So when something like this happens, you get a big drop, everyone wants to know what was the cause of this. So we have to talk about this. What was the cause of this? Here is a trader's perspective. This is Dylan Leclerc had a great tweet thread about it. Let's go through some of these, David. So first off, Dylan says, bull market corrections on the general of 25 to 30% are completely normal and expected. This has happened in all previous bull runs. That's his first point. Mm-hmm. His second point, he talks about Elon Musk here, throwing a Molotov cocktail into the mix here. Also, Elon Musk talking about energy consumption of Bitcoin. So that's one other possible explanation for it. Where else does this thread take us in terms of Dylan's explanations for this downturn, David?
Yeah, he looks at some UTXO analysis where who is sending Bitcoins. This is a Bitcoin focused trader. Who is sending Bitcoins and at what prices? And he draws the connection that you can do this thing called the spent output profit loss ratio. I'm not familiar on this metric, but the conclusion he comes to is that there was a ton of leverage in the system. It's all about leverage. And this is where these normal 20 to 30% drawbacks, which are healthy, turn into violent, immediate, cascading, quick drawbacks. And so he goes on his next tweet, Ryan. He looks at, here's what he says. Following the 64,000 all-time high, the market started to sell off. During the sell-offs, funding flips negative, which means that you are actually incentivized. I think this is right. Correct me if I'm wrong, listeners, I guess. When funding flips negative, you are actually paid to go long. And so each time traders quickly leverage back up. So Bitcoin hit 64,000, it dipped down to 55,000, and people are like, there's the dip. I'm going to buy it and I'm going to leverage up. And so the leverage never got flushed out of the system, right? Underwater longs kept adding to their leverage, right? Every dip, they added more to their leverage. And at some point, this guy claims that on the next tweet, that a bunch of whales saw this, opportunistic whales saw this and deposited into exchanges and began relentlessly spot selling, knowing that how many leverage traders were going to forcibly make them underwater and forcibly liquidate them, right? And so in theory, whales looked at how much leverage was in the system, and they're like, if we dump the market, we can buy discounted Bitcoins, right? And so that's the conspiracy, is that there was way too much leverage that was identifiable, very much like the GME debacle, right? People just noticed how much short position there was, and so they bought a bunch of GME, and then all of a sudden we had the squeeze. This is the same exact thing, but just in the inverse, right? And so now there's a ton of leverage that's flushed out from the system. If you get liquidated, your leverage goes to zero, and that's what happened to a lot of people. We had $27 billion of open interest at the, I believe, the $64,000 mark, and now we got that cut in more than half.
the trader finishes by saying this is nothing and should be treated as a huge buying opportunity. I feel like that's a great trader's explanation of what happened. It's just like there was so much leverage in the market. Downturn caused cascading downturn because of leverage, and the leverage was flushed, right? And that has to happen
Right.
periodically as part of a bull run, which is why you've seen this pattern in other bull runs. You know, what's also interesting, David, that's kind of the trader's take of why this happened. But of course, like crypto media and like the narrative side of crypto wants to take too. Here were, I guess, a few popular takes I heard for why this happened. One, Reuters China banned Bitcoin. Reuters reported that China banned Bitcoin. I don't know if you saw this circulating, but it was in fact not the case. China
Right.
did not ban
Classic China
Bitcoin.
FUD.
This, I don't know how many times this has happened. Like it's
More
literally
than 10.
dozens.
More than
Like
10. Yeah.
for real. So you had
It's
that.
like honestly a ceremony at this point. It's like, oh, we
Yeah,
got
it's
the
like
China FUD
China.
this week.
Yeah, it's going to happen. It's going to happen every 3 months or so, just like clockwork. Elon Musk tweets his tweet that Tesla was dumping 1.5 billion Bitcoin stash. Of course, Tesla was not dumping the Bitcoin stash, although Elon's pretty erratic these days
Very erratic.
in his tweets about cryptocurrency, which we'll get to. Okay, so some people said that was the cause; it was Elon's fault. Over leverage, which we talked about. Other people said it was Tether. So Tether published a breakdown of its reserves, not super cash centric. I don't know if you saw that, David. It's like
also
very
classic
little
FUD, ceremonious FUD. We always get it.
Yes. Also, Tether's compilations, like when you buy a Tether, you're definitely not buying $1 in the bank account. You're buying a lot of other things, but it's
Full
not
faith and
$1 in the
credit in
bank
the
account.
redeemability of $1.
Yeah, plus like treasuries and bonds and all sorts of things. Anyway, separate discussion. That was a reason given. Also, broader macroeconomic trends, inflation warnings.
Right.
What was a reason? Okay, maybe that's led like correlation with stocks. Maybe that's led to the growing fear and uncertainty. Investors are getting skittish. You know, all of these things are given as explanations, but I almost feel like they're always like narratives that sort of retrofit the data. And I'm not convinced by any of them, right? I just think like in bull markets, this sort of thing is going to happen. And then people will look back after it happens and be like, oh, here were the causes very clearly.
Right.
It doesn't actually have to have a cause. It could have been anything that happened. So,
I think holistically, we can say like, oh yeah, all of those things. Like overall, it just made everyone just really down. Like our hero Elon turned against us. Yeah, people are just down about this Tether FUD, like China.
Yeah.
Like, God, maybe it made people pessimistic, right? Holistically, not really any one of these things, but overall, people just like, oh, there's so much to fight. The energy debate is relentless. Nick Carter is getting swarmed. And then also at the same time, we have these over leveraged traders and whales, which really just like lights the dynamite. Like that, I feel like is a more rational explanation.
For sure. And I guess I feel like you could swap this set of headlines out with any other set of headlines in a given week or 2 weeks in crypto, and it would be the same thing. Like the net of this, David, is I feel like a reckoning was needed. A reckoning. People needed to get wrecked after this bull run. Like it had to happen, and dips happen. I tweeted this out, David, right? So like people are stunned by the drop, the sudden drop, right? And I get that, but like
Whiplash.
also
we feel it.
We feel it. Like, but also guys, like zoom out, right? So the prices that you just quoted, right? Ether all the way down to 1800. It was 1800 45 days ago. Like just 45 days. We only lost 45 days at the lowest of the low. Now ETH is recovering a bit, but like, oh my God, man. Like if you bought 45 days ago, you wouldn't have lost anything on ETH. Like, let's zoom out a little bit and realize how much this asset class has been growing, right? Rather than focus on the dips. Like, it is true. When in doubt, zoom out. Like, you have to zoom out and realize that we're sitting at a price right now that we were like 30 days ago, less than 30 days. And as low as low is only 45 days ago from a price perspective. There's a tweet response on my response that just made the point that David, you and I were talking about, that the same thing happened in 2017 from the 420 mark to the 150 mark. So dips are going to happen. It could have been anything. I feel like this was just destined to happen at this point in the cycle.
Yeah, and again, this feels like the marker of the second half of the bull market. That's what it was in 2017. I feel like that's what this is now.
Good take. Springtime. It's funny, kind of